Welcome, all you multifamily enthusiasts, to another episode of the Multifamily Real Estate Experiment Podcast, where we dive deep into the world of real estate investing, innovation, and personal growth. I'm your host, Shalon Hutchison, and you might know me as Hutch, the Marine Investor. Today, we have an extraordinary guest joining us, Marshall Sykes. Marshall is a seasoned real estate investor, a former U.S. Navy captain, and the founder and president of Capitano Investment Group, with a mission to help people captain their wealth by increasing their source of passive income. Marshall brings a wealth of experience from 30 plus years in project management and his extensive real estate investments. He's a general partner in over 3,500 multifamily apartment units and has owned a single family rental portfolio for the past 25 years. We are thrilled to have him on the show. So I want to welcome you, Marshall.
Hutch, thanks for having me. It's a pleasure to be here. Look forward to talking to you today.
Yes, sir. This should be a really good conversation because I think we have some common knowledge that we can dive deep into some conversation, especially as it applies to our military. Before we get into the deep nitty gritty of our conversation, do you have a favorite real estate quote or mantra that drives you?
Yeah, the real estate quotes. There's a lot of good ones out there. I think the one I like from Andrew Carnegie, he was a billionaire back in over 100 years ago, and he was a big steel tycoon, basically.
Yeah.
But he said 90% of all millionaires become so through owning real estate. And he said more money has been made in real estate than all the other industrial investments combined, which is interesting coming from an industrialist and
Yeah.
a billionaire industrialist at that real estate was the way to make money. So it's something that kind of resonates with me.
Yeah. So it dealt with steel. And I think you do some oil and gas as well too, right? Which is what we're going to get into. With all these infrastructure, it's some form of real estate, right? The factory in itself, the steel factory, is also real estate, right? So I think I was talking to a podcast episode yesterday where we had to be a lot more specific about just lumping all the real estate. Because when you speak to the average citizen and you say real estate, they're thinking a house to live in. But that thing goes so far, so broad and deep. So I'm hoping to dive into that a little bit today as we start talking about your specialty in the aspect of real estate. But before we get into the nitty gritty, your bio that I read was fairly short, and you have a long bio, and I would hate to rob our listeners of an opportunity to understand you at the deeper level. So can you tell us, the audience, a little bit more about yourself and your current focus?
Yeah, actually, I'm one of 8 kids. I grew up in a real estate development family. My dad retired Army,
Mhm.
and he wanted to work for himself. He kind of wanted to be an entrepreneur. So him and my mom would build 2 houses at a time, and they'd keep one as a rental and sell one as to live off of, basically.
Yeah.
And so I learned about real estate at a young age, and I worked with them building houses as a teenager, but I certainly didn't like it. And so it was hot summers. I was doing the grunt work, and I didn't really understand the whole big picture. I absorbed a lot, no doubt,
Yeah.
but I didn't really understand the big picture. And so I went and got my engineering degree. I wanted to do that. And then God had other plans for me that combined the construction and the engineering together, and joined the military as a naval officer. I was a civil engineer corps officer where I would build and construct new buildings for military bases,
Oh,
the
wow.
Marines and the Navy. So it was quite interesting. I enjoyed that career. I really went in to just get a little bit of experience, but I'd end up staying 24 years, retiring as a captain. And
Nice.
then I went and worked in the oil and gas business as well.
Man, it's always amazing how it comes full circle, right? But it's like the family was prepping you for the skill that the military need and the level of leadership that you was able to provide, with a deep understanding of what need to be and also what is possible in the avenues of construction. That's pretty cool.
Yeah, I couldn't have done it like that. I planned my career was totally different than
Right.
the fun career that I did. I couldn't have planned it as well as God has.
Oh man. So let's talk about it. Let's dive deep into your military career. Tell us about that journey. Why did you join the Navy? And I know after you join the Navy and they tell you that you're part of something greater than yourself, then of course you want to stay forever because you don't want to let people down and a bunch of different things. So tell us
Right.
about the initial decision to join the Navy and not going into the family business of developments,
I think for me, I think I just wanted to get away from my small town,
right?
maybe, and I wanted to see the world. And I know that's what kind of the Navy mantra is, to join the Navy and see the world. But I wasn't really thinking that. I just
Mhm.
wanted to get some experience and understand engineering a little bit more than just when I was in college.
Yeah,
And I wanted the challenge. Being in the military is a challenge, and it helps you grow as a person and in your leadership skills, but also your engineering skills and just your people skills, really.
yeah,
So that was why I joined. I was planning on staying for 4 years, but I really enjoyed it. I enjoyed moving around. I enjoyed going over to international countries as well. I ended up staying for 24 years. I wasn't sure when I was going to get out. I thought I was going to get out at 20 and I didn't. And I ended up staying a little bit longer. And then it was just time to go. It was time to retire.
yeah. So I understand. I am at that point right now. I'm at 25 and a half years, and I think that time is coming, right? This enlistment takes me to almost 2 years, so we'll see how that goes. So I totally understand. It's definitely a different world inside the military, especially if you are good at what you do, right? And you enjoy living a purposeful life and having an impact on a bigger scale, right? But there comes a point in time where you have served your country, and now it's time for you to move on another segment of your one life on the trajectory. So that's pretty cool. You mentioned that you move around. I want to talk about that here in a little bit, right? So Marshall, you got to distinguish 30 plus years plus in the military and also in third plus in project management. Also, this include a spearheading a $5 billion construction development initiative at the Marine Corps base, Camp Pendleton. Oh man, that's impressive. That's my last duty station was. How did your military background shape your approach towards real estate investing? I don't want to skip over that. Let's dive deep into that construction as much as you can talk about it. And then let's go into how does it shape your investment
Yeah, I think the
approach?
when I was stationed in Italy, I had a chance to redevelop the base, the military base over there. So I was a planning officer for all the new facilities. So
Right.
we brought a team in to help redevelop that base. And when I went to Camp Pendleton, I was the public works officer in charge of all the facilities, engineering, construction. And when I went there, it was the height of the Iraqi war, really, and OEF, OIF. And we had a lot of money coming in because we wanted to increase the training opportunities for the military. And we were growing the force a little bit. So we ended up having about a billion. We went from a $200 million construction program a year. This Camp Pendleton's huge, right? 70,000
Yeah.
people on the base. Went from about 200 million a year to over a billion a year over the next 5 year period. So that planning I did in Italy really helped a lot with Marine Corps with Camp Pendleton because
Okay.
Camp Pendleton has 18 different cantonment areas, right? So you're 18 small mini bases, if you will. And so we had to do planning for all of those. And that construction, we were the biggest thing was a lot of the Marines were still in 1950s barracks that
Yeah.
were basically, if you ever watched Gomer Pyle, they had it's similar to the squad bays they lived in. It was about 40 people on each side of a building, all in an open area, and they had three toilets, three sinks, three showers between those 40 people. And by the way, they only had four or so electrical outlets because
Mhm.
in the 50s you didn't need them as much as you do now.
Nope.
So it was interesting. And we would tour the people from DC. We would tour the congressmen and their staffs through there. It seemed like it was time to modernize, and they knew that. And so the money just came out. We did $1 billion of new barracks. And when I say barracks, we're talking about 200 units of multifamily apartments. The unit itself is a little different because they're smaller, but the infrastructure of a barracks is exactly what a multifamily development is like. So that kind of piqued my interest in multifamily and real estate.
Yeah.
And I always wanted to get into that when I got out of the military, but I really didn't see a way on that, and nothing opened up on that until after I was out for about 10 years. And then I started to get into real estate syndications and multifamily.
That is pretty cool because I think about all those barracks that the Marines live in. 'Cause I don't think I never lived in barracks. I did live in barracks for a short time while attending the career course out in Camp Pendleton several years ago. Yes, definitely a necessity. The barracks that I lived in here in Hawaii back in the day, my junior Marine years, those were World War II barracks, and they took forever to tear them down. They just tore some of them down not too long ago to build new barracks because the modernization is necessary for a bunch of different reasons. So that's pretty cool. Throughout your career, you mentioned that you move from place to places, right? And you enjoy that. But with that comes some struggles. What are some of the struggles you face as an active duty sailor moving around?
Yeah, I think the biggest thing is you're starting over all the time, right? Pretty much.
Right,
Your career's not so much because you're still tied into the bigger career,
right.
but especially once you're married, it takes a toll on that a little bit.
It
So my
does.
wife was when we got married, we were living in Southern California. She was a chemist working as a QC director for a seed company. And so we moved to Italy. She couldn't really work there. She had to work on base if for anything. So she just took a low paying job. So it wasn't like
Mhm.
a skilled job with chemistry degree, that kind of thing is what I mean
Yeah,
by that. So then we moved to Texas and then we moved to Kentucky. And every time she had to start over and over again. And the companies knew you were only going to be there a couple of years. So she struggled with that and struggled with finding the right employment. And so what we came up with together was, hey, let's just save all your income. We'll save it all and we'll only live off of mine. And then once we get to our next duty station, when we want to start a family, we will use all yours to start investing in the real estate. So I leveraged my resources from my family because my family was in the business. So leverage
yeah,
those resources. I had my brother help me build houses so that we could keep them and have a rental portfolio. And my wife was able to do that work because she managed the whole process. And that was her job, if you will, so that that was a struggle that we had to figure out by moving around in the military and being in the military. But we were able to have her do the primary piece of the investing with my family. And then we were able to build a real estate portfolio. I think that's something that military nowadays you can remotely. We weren't able to do that 20 something years ago,
right.
but it's just an easier way to take a career with you.
No, that makes sense. I like that strategy, right? Because in most cases, the service member's income is able to take care of all the family's living expenses. So anything above that should be money that can make more money, like can go out and come back with friends, right? Right. Or go out and multiply, get some babies and come back, right? So, no, so I like that approach. And I think a lot more people in the military need to be focusing on that because it's challenging to see some folks who are on the verge of retirement and stressed out about what their income will be like because they didn't take a strategic approach or we didn't take a strategic approach like you do. I think I'll be good, but I say we because we could have done better. You know what I'm saying?
Yeah, I
In the
think
past. Yeah.
everybody can do better. I think nowadays you're getting more and more opportunity as younger folks. Some of them are
Okay.
20 that are doing this kind of stuff now. You really get into real estate. I think it's easier to get in it. Real estate develops over time. So the earlier you get into it, the better, really.
All right, so let's dive deep into your real estate background. So you're raising a family of real estate, right? You see your parents develop or your family develop properties. Sound like they focus on duplexes and above,
They really just single family homes is what
single family.
they were
Okay,
focused on. That's what
all
they're
right,
still focused on.
okay, nice. So how did your early exposure to real estate shape your career investment strategy?
I think for me, in conversations with my dad, he always wanted
Right,
to have 10 rental income, 10 rentals that were paid off that he could just collect the money on basically. But
right,
he was obviously active in managing them and all that. But
mhm,
that would give him the opportunity to have passive income and set him and my mom up for life, basically. And
right,
that's the kind of thought process I had as well. And my wife and I did achieve having 10 rental units or rental houses. So we're in that space. And so it's very, and I still live off of some of those as well, in
Yeah.
addition to the military pension. But also, it's just extra income from real estate like that really goes a long way to help you out. And that's what I took away from that growing up with in that situation. Now, I didn't start as early as I could have. I didn't start buying real estate probably till 35 or 36, even though I had that advantage early on. And I think it
Mhm.
doesn't matter when you start, just start. That's
Yeah.
right now, you're here right now, so just go ahead and start.
Oftentimes we feel as if we are late to the game or late in life to do a thing. But what I've learned is that there's really no measurement because all these things that we want to go back and tell our 20-year-old self, our 20-year-old self was not looking for that. So the chance of them being successful at that thing is probably slim because they were not seeking that quality of living or that level of thinking or looking for a paradigm shift. So now, you mentioned having 10 paid off houses. Have your paradigm shifted about that in any way as far as using leverage and the velocity of your capital?
I did shift a little bit because you
Right.
go back and if you start looking at your return on your equity you have into a property, you have to look at that. And if it's not high as you want it to be, you got
Hmm.
to decide, hey, are there alternative investments I can make to do that? So I tested the waters on that a little bit. I sold a couple houses and invested them in other ways so that I could have a little more diversity on that. I did not sell them all,
Yeah.
but because having some that are paid off and you're in control of that, then that goes a long ways as well.
Yeah, no doubt. So I do like that strategy. I can imagine the single family homes that I have, if they was all paid off, the income would be pretty significant, right? But one of the things that I've done is that I've leveraged the equity. I invest that into multifamily real estate. And of course, the tenants are paying down that mortgage and also the equity is improving. And so I use that equity as a catalyst towards a bigger investment that creates a little more cash flow, but also for the economy of scale as well. But to your point, ensure that the numbers work out. So, what prompted you to turn to real estate syndication, and how has this strategy helped you scale your investment portfolio to achieve your financial goal?
Yeah, I think always like going back to my Camp Pendleton days when I was building
Yeah,
Barrett. I always was interested in multifamily and
yeah,
owning apartments, and it was intriguing to me, given my real estate background. So about 6, 7 years ago, I just heard about syndications. I was living overseas in the Middle East, and I came
gotcha.
back and started hearing about syndications. I'm like, what are those things? Where you can invest, a group of investors can invest together and pull their money together and buy an apartment building. That's
Yeah,
basically what syndication is, right? Or something else like an oil and gas deal or a car wash or things of that nature.
yeah,
So that was intriguing to me. And the returns on investment, getting back to return on investment, is projected to be much higher in those
okay,
syndications than what I was getting as a single family home. So I wanted to test the waters on that. I did do that, and I tested with three different operators that were sponsoring they were the owners basically of them
yeah,
in three different markets just to see the difference in markets and the difference in operators. And then I decided, hey, after doing that 3, 5 times, I decided I'm considering doing this myself. And so I ended up being on the general partner side, on the owner side of a few different apartments
yeah.
and able to do that. So a very learning experience for sure. It's very intriguing. And now I've gotten into oil and gas syndications and other types of syndications like that.
Yeah, that's phenomenal. Let's before we get into the oil and gas syndication, every investor face challenges, right? What are some of the struggles you have encountered in a multifamily sector, and how did you overcome them?
I think the biggest struggle was that many things in commercial real estate, they
Right,
choose to use bridge loans and variable interest rates because they give a lot more flexibility to the owners
right.
in in that versus a fixed rate loan from a government agency, Freddie Mac, Fannie Mae. There you go.
Yeah.
I always get them mixed up. But anyway, the government loans are fixed rate. That's the good thing. They're more certain, the fixed rate, but
Right.
they have a lot of things that may hold you back a little bit too. So
Hmm.
that's why people did the bridge loans. And I think, but then the Fed, all the money after COVID, I think it was $5 trillion that was given out to the industry and people. That made inflation go up, right? So to pull back the inflation, they've increased the interest rates. We went up an historic amount, fastest rise ever in
Yeah.
amount of time. And I don't think the people in the industry just weren't prepared for that. No matter what industry you were in, if you were
Yeah.
using variable interest rate, you're not ready for that type of thing. And you're not expecting it either because it's never happened before, right? So instead of having a 4% loan, now you have a 9 or 10% loan. And
It, it
that's
does.
just some of the struggles we've had on our properties have been a lot to do with that type of thing.
Yeah, and we sold a property last month, and you talk about the discounts that we're seeing in real estate. I would say a victim was one of those properties that was sold at a discount, right? Because it was a fairly well-performing property, right? And we did not have a bridge loan on it. But it was just the economic environment that we were selling the property in. For it to make sense to our buyers, it had to be sold at a discount. So there are properties out there that may not be in financial distress, but there are a lot in financial distress that will be sold at a discount. How are you posturing your company to capitalize on some of these distressed properties that are in market that has good fundamentals?
Yeah, I think for me, after I doing a few general partner as a general
Right.
partner, I decided, hey, I'd like to do, I'd like somebody else to take care of the day to day.
Okay.
At a point in my career, I don't want to do the day to day anymore. I want to have more flexibility with my time. So I mainly have been a fund manager at this point with where I
Okay.
raise capital and invest in good deals with good sponsors, right?
Okay.
So my time is better suited towards networking and getting in with the right sponsors and vetting them for my investor community. That's what I'm really focused on. That's what I shifted to some 18 months ago, shifted to more of that type of thing. So also enabled me to not only do multifamily, but to do the oil and gas, to do a tech startup, to do some other credit funds and other types of funds.
Oh, that's awesome. So let's talk about it. This last one, the oil and gas syndication. Can you discuss your experience in that sector and how it compares to the traditional real estate investment that we're used to,
Yeah, I think having worked with an oil major for eight
right?
years helped me understand it, helped me to realize the importance of it in the economy. I like to network, and through my networking, I came across a company and a couple of colleagues that I really enjoyed talking to and felt like
Okay.
they were very trustworthy, and I got to know them a lot. And then I decided to go in and invest with them in an oil and gas syndication. They had the right level of depth and partnerships in those that I felt very comfortable about doing that. And so that's how I started in that. We've already had two distributions way ahead of the game,
Yeah.
which has been nice. Getting those distributions, those cash flow coming in is really nice, especially if it's ahead of the game.
Yeah, those are all always good. No, you care to talk about some of the tax benefits in oil and gas compared to other form of investment or even real estate. I've been hearing a lot of good things about the tax benefits.
Yeah, there are some good things about tax benefits. So when you invest in an oil and gas deal, basically, you can invest as a general partner or as a limited partner.
Right.
And that's a little different than multifamily because as a multifamily, you're really investing as a limited partner, basically a passive investor. But in oil and gas, the tax law allows you to choose as an investor. You're choosing as a general partner or as a limited partner. And if you choose as a general partner, you're basically choosing for the first year. And you're to do that. Choosing as a general partner allows you to take off any losses that you have as active losses instead of
Okay.
passive losses on your taxes. So you can offset those with your active income, like your W-2 income. So if
Interesting.
you have $100,000 loss or $100,000 loss in oil and gas, and you made 200,000 in your W-2 income, then that reduces your W-2 income down 100,000. I mean, that's simple math, but it's
Yeah.
much more complicated than that. But Then that way for the tech from the IRS perspective, you made $100,000, not 200,000. The CPAs will have to figure all that out. I'm not a CPA, but certainly talk to your CPA about that. But that allows you to do that. There are some liabilities that come with choosing a general partner as well. So you have to consider all those together.
Got you. So what determines what an investor's a general partner, limited partner in a oil and gas investment?
It's all about whether you, as an investor, decide if you're going to choose as a general partner or as a limited
Okay,
partner.
got you.
You have that election when you're going through the investment process. But if you do choose the reason you choose as a general partner because when most oil and gas is because the startup costs
Hmm.
take a lot of capital. You can write those off. In the first
Yeah.
year, that's very important, especially if you're doing drilling costs or other types of infrastructure costs. Those are the big ticket items. Those are the big expenses. And then once the oil is pumping out of the ground, then you're going to get cash flow. So you don't have as many expenses.
Okay. Yeah, I do like that idea of being able to write off your take the paper loss, not necessarily a loss, but the paper loss, and then use it to show losses in your earned income without having that real estate professional status. I think that's a pretty cool strategy. So yeah, I appreciate you, man. I want to be respectful of your time. We're gonna go into the focus round. So Marshall, what do you do for fun?
Oh, I like to lift weights or hang out with my family. I also like word games. I've always liked word games. My buddy and I grew up playing Scrabble and Ruzzle all the time, so I always loved those games.
It's good. What is one opportunity that was a game changer for you?
One opportunity. I think getting in that oil and gas syndication was a game changer
Okay.
for me because it allowed me to have the confidence to do it. And it allowed me to have to offer it to my investor community, which I
Right.
think was huge. That was a big opportunity for me because it allows me not just to be multifamily, but to have more opportunity for me and my investor community.
Yeah, that is one of the things that HQuest Capital is focused on right now as well, too. How can we bring more diversity to or some diversity to our investors right now? Because right now our focus is multifamily, but we're looking at a couple of different debt funds. Oil and gas is definitely have our interests as well. What is your most important communication tip, Marshall?
I think the being available when an investor wants to talk, I think is
Right.
the biggest thing because they want to know that they're being heard and that you care enough about them to talk to them. Yeah.
That's good. What is one thing you wish you understood earlier?
I, I think the big thing for me is how valuable it is to get started in real estate early because it is a long game. It's not a quick thing. You're not buying a stock today and it goes up $30 and you sell it tomorrow. You're not doing that.
Yeah,
Most of the time when you buy real estate, it's illiquid, so you can't just change it real quick. So that's get started as soon as you can. Yeah.
that's pretty cool. Now, to what do you attribute your success, Marshall?
What do I
To,
attribute to my success?
yes.
I think it's a lot of things. There's not
Yeah,
just one thing, and it's a lot of it's my parents, my family, my brothers and sisters, but also my wife and later after we got married, of course. My wife encourages me every day and helps me when I'm struggling, especially. So that's always helpful. And my faith
oh
in
yeah,
God, of course, as well.
that's good. Sound like you have a good team.
Have a really good team, no doubt.
I want to talk before we head out this podcast. I want to talk to you just real quick. There's a lot of military veterans or even active duty who are reluctant to invest a large amount of capital into real estate. What would you say to those individuals who might have their money still in the TSP or trust in this financial advisor that may not be a millionaire, all that good stuff, and all their money is encumbered by Wall Street? What would you tell some of those military veterans or active duty members?
There are solutions for you. You can
Right,
test the waters to see how real estate can be profitable for you in your portfolio. I don't know if you can do it out of the TSP, but certainly after you get out of the military, you can move it from the TSP to a self-directed IRA account, which
right.
they allow you to invest in real estate. You can also talk to folks like Hutch and I, and Sometimes we have a minimum investment of $100,000. Maybe everybody can't do that right away. So
Yeah.
talk to people and say, hey, maybe 25,000 would allow you, you can get in for 25,000 to test things out.
Yeah, absolutely. I appreciate that, man. So thank you so much, Marshall, for sharing your incredible journey and insights with us today. Your story is definitely truly inspiring. I'm sure that our listeners have gained a tremendous value from your knowledge and experience. So thank you, listeners, for tuning into another episode of the Multifamily Real Estate Experiment Podcast. I trust that this episode added a lot of value to your real estate journey and also create synergy in your real estate portfolio. So don't forget to leave us an honest feedback and review, if not too much pressure. Right. So, Marshall, if our listeners want to get in touch with you, what is the best way to do that?
Yeah, they certainly can get in touch with me. Main thing is at investwiththecaptain.com. So you can go
Okay.
right to that website, sign up for a free download
Okay.
about real estate investing, and I'll be in contact with you there.
Okay. All right. Tight, tight. Thank you again for listening to another episode of the Multifamily Real Estate Experiment Podcast, aka the M Free Podcast. Let's get that hashtag M Free going. I'm Hutch, the Marine Investor. Out.